But we begin, as always, with three things investors ought to be thinking about right now. Stocks retreated as investors await word from Jay Powell next week. The Fed is expected to lift rates by a half point. Jamie Dimon and David Solomon warning of a recession next year, stocks to consider in a slowdown. And Gamestop is dropping crypto and laying off workers after a third quarter earnings miss. What business leaders can learn from the meme stock darling. On the Barron's Roundtable, my colleagues Ben Levisohn, Carleton English, and Jack Hough. So Ben, on the charts, not a great week for stocks, but you actually see reason for hope in the numbers.
I do. I mean, this was a kind of week where we came in, we've just had a massive rally, 15% or so, and we have no real news. It's just a news vacuum heading into a week where we're going to get the Fed, we're going to get inflation numbers, and the market dropped a bunch. It dropped, 3 or 4%. But the good news there is that the market stopped right around 3,900. That was a resistance point. Now it's become support. If that level holds, this market does look like it could have a short-term base in which to build off of.
At 3,900, it doesn't appear to be pricing in as big an earnings drop as we would normally get in a recession. Is that a sign there's no recession, or are analysts still too optimistic?
Well, I think analysts are too optimistic. They almost always are. We've had this kind of strange thing going on the past few years where analysts have actually been underestimating what earnings would look like. And now I think we're going back to normal, actually, as Jack has talked about before, where analysts come in too optimistic and the numbers get ratcheted down. I think the hope that the investors have is that the numbers will come down, but not so much, and that the market can actually support the earnings, especially if the Fed starts to dial things back a little bit. You get valuation support. The earnings come down a little bit, but not so much that you actually mess things up horribly.
Okay, that's the hope.
That's the
hope. Does Ben think that things will get messed up horribly?
No, I think that depends on a soft landing. I just don't think you're going to get a soft landing. I think the Fed is going to over-tighten, and I think at some point we are going to get that recession. The market's probably going to rally on hopes that, hey, maybe not even hopes, maybe it's going to assume that there's going to be a soft landing, and then the recession hits, and that's when the market starts to fall again.
And Carleton, this is what Jamie Dimon and David Solomon are talking about. What are you seeing?
Yeah, well, David Solomon is pretty much in agreement with Ben here, where he only sees a 35% of this soft landing where inflation can be cooled without putting the economy in a recession. Those were comments he made earlier this week. JP Morgan CEO Jamie Dimon is reiterating his calls on some sort of recession coming. Now, from Jamie, this is nothing new. For the last 6 months, he's been talking about, is there a hurricane coming? Is it going to be a bad hurricane, a strong one, whatever? He does, endpoint is he does see some sort of recession coming by 2023.
Another signal out there is oil. Oil prices are actually at the lowest point all year. They're below the average from last year. That could be great news if you're filling up at the pump, but it also could be a sign of an economic slowdown globally and a recession. Yeah,
so it definitely could be a sign that people are just not traveling as much, right? Because they're feeling the economic pain from inflation and worries over a recession. One thing I am a little skeptical or maybe a little nervous about these low oil prices we're seeing now, because we are seeing signs of China easing COVID restrictions and coming back online. Is that going to cause demand to go up? We are only in the early stages of winter, so there is a chance that, demand is also going to creep up too. But for right now, I'm sure people enjoy what they're paying at the pump, or rather what they're not paying at the pump.
Okay. Jack is going to talk to us about a meme stock darling right now. Real quick, though, any advice for investors in that scenario?
Yeah, so you want to.
It's not meme stocks.
It is not meme stocks. I'm sorry, Jack. So it basically comes down to what's boring. What is going to hold up during a downturn, and that's going to be your utilities and your consumer staples.
Okay, GameStop, not exactly a stable piece of equity world right there.
Only two problems for GameStop: the game part and the stop part. The games are not going well. 19% decline year over year in software sales in the latest quarter. The stop part is it's stopping on this crypto. The company had developed this plan to move into life beyond selling games on discs through malls, because who knows how long that will last. So the plan was launch an NFT marketplace, non-fungible tokens, and a crypto wallet, and it doubled down on that with a partnership with FTX in September. Crypto prices have collapsed. FTX has collapsed. One analyst calls non-fungible tokens a non-starter for the company. This is Michael Pachter at Wedbush Securities. He also said the company's latest earnings call resembled a hostage video, which doesn't sound good. It was about 8 minutes long. There were no questions. So, there is cash on the balance sheet. It's dwindling. I don't want to pretend that the problems are easy, but You can manage declining businesses for cash. You wonder if they're doing as well as they could with a core games business. And also, during that meme period, the market value exploded from $1 billion and changed to over $15 billion. When Wall Street hands you a ludicrous stock market value for a flimsy reason, ring the register with both hands as fast as you can. They didn't issue enough shares.
Sell that stock, take the cash. Real quick, Jack, how do they make money? People aren't really buying discs to put in a game console. NFT was an interesting idea, right? Because people on these games actually sell and buy NFTs. What can they do to keep this a viable enterprise?
I don't know how you match the margins of the used game marketplace. That was always the key. Not the consoles, not the new games, but the high markups on used games. And I don't know what you do that's a good match for that real estate right now. So I'm not sure I have the answer. I'm not sure whatever they could do online would match those margins.
Good luck, GameStop.